have an idea of who is here. All right, so we got a handful of people. All good. Let's jump into it. So take a quick look at the markets. S&P down or flat, I should say, here at the open. Looking at SPY over here, just really a flat open first few minutes. It will drop down negative, who knows. So SPY's off a tad, SPX up a fraction, pretty flat, NASDAQ down, and Russell is up a bit. So let's jump into that. Let's jump into a few things and take a look. I did make some notes over the weekend. I was looking at ES and the overall S&P. Had a good day on Friday. I think a lot of that was due to jobs miss, which means, hey, maybe we're not going to have inflation, which could be good for the market. Fed won't do anything with rates, should keep things low. Status quo, which could be overall good for the markets. We did see, and continued bond movement. So here's bonds as well. Bonds bumping up to the top of the Bollinger Band, coming off of this nice trough dip here. And now you see today squeeze firing on bonds. So if bonds are going to launch higher, which it looks like maybe they're trying to do, Bollinger Bands are opening up. It's pretty well stacked with the short moving averages still below the longer moving averages, but bonds trying to come off of these lows. I'm not a big bond person, but it does impact the markets overall. And I think you're starting to see bonds move up here. And also, when you look at the yield, again, I don't really care much about this stuff, but I do know it impacts the market overall. You've got yields continuing to drop. They're up a tad this morning, but if you see yields start to drop back down to this support line, you're on this downtrend on yields. So if yields drop, that's good for tech stocks and not great for the financials and so forth. And just a quick look at skew after hitting some all-time highs, still pretty elevated here, still at some really high levels, which is why selling premium here is really fantastic. So selling some short-term premium, I think they're still a great thing for us. So let's look at some of the stocks that I took a look at over the weekend, and then we'll look at our positions. I want to give the market a few minutes to open up before we jump into our positions, but our account's up nicely today. So let's take a look at where some of the stocks that I'm watching might be. So ATVI, very interesting. This is a nice reversal area in here. And we've been just trading a little bit sideways, but you're stacked on all the moving averages. Looks like the 50 is about to cross back over the 100. And you're up above, you bounced off of the 100, moving up here. Broke the 8 on Friday, just selling sideways a little bit today, but ATVI looks really interesting here. And look at MACD and stochastics here, starting to look pretty decent as well. Might be losing a little momentum. We'll keep an eye on it. It's not one that, I think is a great opportunity, but it's not a bad looking opportunity, especially to sell some puts in here. And if I'm looking at ATVI, IV is just so poor, but if I'm looking at next Friday, I'm not looking at this week, but I'm looking at next Friday's down here around this 94 level. It's not bad premium for ATVI. So could sell this 94 to next week and sell this put, but it looks decent in here as we go. So ATVI looks good. All right, Vinco, a lot of people talking about this Be Big. It's on my 13 EMA watch list typically. Yep, still there. So most of these came off of the stocks above the 13. I'm just looking to see which ones are stacked up. This one's stacked, moving higher again today. So speculative little play might be worth, taking a shot at something here. I'm not selling calls, not doing any of that. But if you want to get long and take a little risk on this thing, sell something on this Be Big, which is Vinco. Costco looks really good as well. It's been in a squeeze for a little over a week now, starting to get positive movement here. I like the movement on the MACD coming off of this move here. Stochastics, RSI, both higher. So I really like Costco. So it's off a little bit today, giving you an opportunity. I think Costco is going higher and really like the way Costco looks. Let's move these up. So Costco is definitely something to take a look at. Might be a good little butterfly trade opportunity. CRM also looks really, really good. And again, if anybody wants to take a look at any particular trades or something along those, that you've got, you can certainly type them in chat here on Zoom, and I will be more than happy to take a look from my end of things. And then Igor and will be on around 10. Gabe, anyone else who wants to take a look as well, fantastic. But I like CRM here as well. Get a nice little pullback to the 8 moving average, moving higher. You're not exactly stacked here, but you've got a nice squeeze momentum moving higher. MACD, stochastics, everything looks good. I like CRM here for a move higher. Look at this Bollinger Band opening up on the upside here. It broke this downtrend that we've been in for a bit. So we bumped against this downtrend 4 times, 5 times, 6 times, maybe. Finally broke it, came back down close to it here, and now starting to move higher. So I really like CRM. So I think this is a good opportunity to look at something if you're interested. Dish I like as well. You're starting to see this nice rounded area in here after a nice move higher, a little bit of a pat flag, whatever pattern here. But what I really like the most on Dish is I like the fact that this squeeze, TTM squeeze, is reversing momentum, as is the MACD. So I love these patterns here. I think you chance to get in early on something. Entering a squeeze, Bollinger Bands are getting tighter on Dish. I like it, and this might be one that today I'm willing to look at for a selling a put on Dish. I'm looking at next Friday's action. I'm going to look at this area here, which is around 43.5, 43 for support. And I think if we sold the 43, we can get pretty close to 48.50 cents for Dish, which I really like. It's moving up higher here in a squeeze. Things look stacked pretty well. All your moving averages are stacked. I really like it. So I'm actually looking at that one as a wheel trade in here. And if we did the 43 for 48 cents, that's about a 1.1% over the next 11 days, which is a 37% APR. So I really like Dish at right here. Let's watch what happens here this morning. I'll give it a little bit of time, but it looks good. Markets sold off a bit, but starting to reverse. So I'm going to throw this trade up on Dish. I'm going to let it sit. It's a little bit out of where things are. The only thing on Dish is the spreads are a bit wide, which makes me a little bit nervous on those, but it's all good. If we can get somewhere around 43 cents for Dish, now it's starting to really move. So I may have to, I'm modifying my strikes a bit. All right, let's see if we can get filled on Dish. It's starting to move quicker than me. I know it's early. Who knows what can happen in the market, but ticks are nicely positive. Advanced decliners slightly positive. Pretty big reversal looking candle there on SPX, SPY. Yeah, I can't get filled on this dish. I really like it here though. It's moved from 48 down to 40 cents. So it's really moving pretty good. I think 40 cents, I'm still happy with it. So we're going to get in. In fact, we got filled here at 41 cents. So I am going to put a wheel trade on this morning in Dish because I do like the way it looks. Here, this is one of my favorite looking charts for a wheel trade stock, something that's low, came down, reversing, has a pretty clear support level. So today we're going to get in on Dish and we're going to sell the June 18th. I'm going to sell the 43 puts and we're doing that for 41 cents. And we'll do next handful of contracts. So we're in on Dish. So let me get that thing posted here real quick. And Gabe is out of the chute already on a 7 DTE. That was quick. All right. All right, so we put a Dish trade on. I do like this move in here. It's up nicely on the day. We'll keep going. Dick's Sporting Goods is another one in here that's made a nice run up, came back down to the 8, bouncing off. It's getting a little long in the tooth, but you're starting to get some increased momentum here. I do like the way Dick's looks, though. It's at the top of this channel. So we'll see if it can go, but I think Dick's has more upside to go on this. So I think Dick's could be putting you near highs. Etsy, I like Etsy here. This is a support line that dates back quite a ways. Let's go. This support line goes all the way back here to November. So we've got some area of support here since last November in this area, and then we've come down and we've really just been messing around in this area on support. So I like where Etsy is sitting right now. It's below most of its major moving averages, which is what I don't like. Entering a squeeze here, we get some more sideways movement and get some more repair. This downtrend is still intact. We're going to watch it. I'm not pulling any triggers on that one yet. So Facebook, getting a little long in the tooth on the squeeze firing here, but you might have some more opportunity on this. Moving averages all stacked, came back down, didn't quite hit the 21 EMA, but is bouncing and moving higher. Not loving Facebook yet. However, General Motors here, this one's getting a little long as well on this rally. I would love to see it pull back closer to 21. Don't know if we're going to get that opportunity. This was the opportunity here. Here's that basing formation that I really like, that as soon as this thing starts to turn and you get these things positive right here, this is where I really like to get long. It was in a short squeeze, which is usually pretty strong, and then fired here. So GM's already gone a bit. Let's see where it goes, but we'll let that one go. Google, same thing, had this nice basing. This is where I really like to see getting in on this move. I still think it's a good time on Google. I think Google's moving higher. You've got your Bollinger Bands opening up as well. So I think Google looks nice in here. Home Depot, I love the basing movement here. You're at new low areas here, but this could be a double bottom area on Home Depot. I don't know. I went to Home Depot this weekend to buy a few things, and that's the most cars I've seen in a Home Depot lot in a long time. So a lot of people hitting Home Depot. It is below these moving averages. The 200, 150 are stacked. These aren't the 8 and 21 EMAs. So as soon as we can make some kind of a move up into these 8 and 21s, I think Home Depot. So it's something I'm definitely watching. McDonald's, though, perfect looking. I love the fact that this thing was down here. You see the reversal. You see MACD and stochastics moving higher. It has been in a squeeze for about a week, and now you're getting the squeeze. It hasn't fired with a green yet, but it's really starting to show the momentum going on it. It's up a bit today. So I really like McDonald's here. I think McDonald's is a good opportunity to move higher. You have all of your moving averages stacked. It's bouncing off of the 821 and the 50, which it's bounced off of a couple times. And I think you've got all the makings of McDonald's moving higher. Just this Bollinger Band tightening, which is why you're in a squeeze. All it's going to take is a little bit of this move here. So McDonald's definitely something that I'm looking at. NEO, something else I looked at over the weekend, had that pattern here, which is what I love to see. It's already made that move higher, squeeze momentum, everything's showing that it's moving up, but you've got this nice little support area in here. Or I'm sorry, resistance, my bad. So resistance area in here. I think this is a good opportunity. I think we break this and we're making another nice run. We definitely broke our downtrend, moving higher here. I'd like to see there's a little bit more repair of these technicals, but you're above the 200 finally after being down below it for several weeks. And you've got the 8 above the 21 EMA, you're above the 50, your 100's up here. So we're all starting to converge in this 42-ish area. You could really start to see this thing go if it breaks above. So there's something I'm looking at on NEO. PEN, I do like the looks of PEN as well. I think you've got a good basis of support here on it, and you're starting to move higher, running off of the 8 into the 21 today. So I really like where this thing's going. Still below its moving averages, so I'm not ready yet on PEN. Plug, this is one that we got out of for a loss on a wheel trade a while ago, back up in here, below here. It started to, it's made a decent recovery. Give it a little bit more time to get these moving averages back into place. PayPal, so like PayPal, here's that move right here's where I would love to have gotten in, but we're not far from that. So this was where things looked to really be good. Squeeze was firing up in here, and you're only 262 versus somewhere around here at the, the 258. So you're really only 4 points ahead. You've got this pullback today. Everything's opening up. I think that this is a good opportunity here on PayPal as well, if this thing starts to move higher. Put QQQ on here because I do like tech stocks this week. So I do like the look of tech, and let's keep an eye on where things go. But this one has the most opportunity. Bollinger Bands are starting to open up. You've got great momentum moving higher. Everything here is starting to move higher. This was the spot when it broke for me, right in here. And you're only a couple points above that. So I think this is just a great opportunity to get into tech and maybe make another leg higher. Is it going to last a long time? Don't know, but I think weakness today, which is pretty flat, is giving us an opportunity on QQQ. And I really like Visa. I saw it over the weekend. I didn't expect this to happen today, but you're in a squeeze. This is the play where you're starting to break higher. Things are pointing up. I was hoping it wasn't going to do this on me today. I really wanted to get in on Visa, but I still might. I think Visa's making a run here. So I think Visa looks super strong for a really good run on things. So I think if that's something you guys have an interest in, there's a good handful of stocks that we've covered. So I really like Visa. I was hoping we would be more in this spot and not this gap, but it's all good. Shows a really good move higher. And if we look at volume, this move here has not been on fantastic volume. So I'd like to see what if today's volume can get above Friday. And I think that's a good opportunity. This reversal here was also a really good signal for us on this, which would have put us again back in here. And then I think this is a good opportunity. So I think Visa looks really, really, really good. Just a quick look at today's strong sectors. Right now you've got, geez, this looks ridiculous. So let's move off of that. Here's transports today. I need to add percentage to these. Boy, there's some crazy looking charts with it. Banana stuff here on, it's not even worth looking at sectors right now. We've got squeeze firing here on MIC. I don't know anything about McGuire Infrastructure. Novartis as well. Squeeze starting to fire here, moving higher. Interesting. I don't know much about QTS Realty. That thing's gone. It shot way up, and so did this one. So we fired pretty good on those. See if we get anything on the MOBO bands here. Nothing. Nothing there today. Okay, so let's take a quick look. So let's look at the positions that we are in. So right now I have ES trade on. It's the beginning of my huge black swan hedge trade where I sold 3 puts out to September 17th, 100 days out. It was 110 when I sold them. I sold those for roughly $3.05. Those have dropped to 262 so far, so that's positive. But I also bought 5 of the August 20th puts. So with that money, and then what I will do is if these short ones get down to about 20 cents or so, they're down 40 cents. As soon as they get down to 20 cents or 262, I will buy those as well, and I'll buy those back, which will give me free longs, and then I'll probably do it again. I'll probably buy some more longs with and finance them with some shorts, and then keep selling the shorts out, which is going to give me a bunch of long ES in my account, which gives me negative delta. MES trades doing really well. Let's take a look where we are today. I'll wait probably a little bit longer and we'll take one off. On the MES trades, our oldest one's a 3760, but our most profitable one right now is our 3710. So that's what I'll be taking off today. That's our second oldest. So I'll be taking the 3710 put off today. That's going to be a nice winner. So we'll keep playing the MES trades. And now that we're down on some big long red candles here a bit, we'll be able to buy in something at a pretty good price today. So it's all good. In fact, I'm going to look to sell this 3710, which is my most profitable MES put. I'll put in an order to sell that one, and then we're also going to look to buy, I'm sorry, we're going to buy that one back. We're going to sell. Where are we sitting? Okay, just sold that one for $435, I believe. Yep. I know I'm not sharing a screen with these on it, but bear with me for a second. So that's a 86% premium capture. All right, so we'll close off one of our MES trades for a winner. 435 was the winner on that one. Give me a second. All right, we got that posted. And that's a nice gain on that one. And then let's look to add another one here. We're at 42.10. So we're going to look to go out of the money to roughly 37.90. 37.90 is going to put us. We got one on at 37.90, so let's go 3,800. And we'll put an order in. All right, so we'll let that thing work. Right now, so taking a quick look over on the right hand of the screen here, advanced decliners have gone negative, but tick is still largely positive. You got the 15-minute pointing down as we broke the first 15-minute range. And this would be right here. You saw this on this move. This is a day trade sell signal, which you would have sold right here. And that might have been a good quick trade. Obviously, we're not doing that here. Let's see where this takes us down. We're starting to flatten out on the 5. So I've got an order in here for a new MES trade. Again, I don't really, time of day, it makes a little difference, but not a lot. And we're going to put on the July 30th trade. We're going to sell the 3,800, and we're looking to try to get 2,250. Don't know if I'll get that or not, and that's going to take up 1,068. Okay. Okay. All right, so digressing a bit there on the MES trades, but on this move lower, I think it's a good chance to try to put something on. I might have to walk this thing up just a fraction to 2,250. Or 22, I'm sorry, walking to 22.25. You know, I'm going to let it sit. See if we get any more weakness. If not, we'll move the strikes. Okay. All right, AMC. Let's take a look at where we are on AMC today. Here we go, making that move. Now, we did put on the 60-70 spread in AMC. So we do have a spread up here. That's up nicely today for us. This thing continues to rock and roll up here. We bought the 60, sold the 70 call, pretty low risk. And that one's paying off so far on AMC. So all good on AMC. AMD, so take a look at AMD. We sold the 84 calls. We're sitting below those right now. We own the 86. It's all good in here as we keep moving forward. And this thing's already at a 50% premium capture already, and we still have 4 days to go on AMD. Let's take another look at some other stocks. BTX, all the rage these days for people. I think this is worth a flyer. I like the reversal move here. Struggling a bit today. Couldn't break this 21 EMA. So we'll watch, but might be something that's worth a shot at some point in time. Coin, we'll sit here and continue to watch as this drops a bit. Let's get down in here and take a quick look at Bitcoin today. So on Bitcoin, it's off a little bit today on there, which gets, okay, hey, we just got filled on our MES trade, 2250. So on this little down move, so I'll post it. And so we sold another MES, and then we bought one back. Okay. So we're good on those MES, got a nice little premium for that thing on this down move. And we're all good on there. So Bitcoin down a bit today, see if this thing can stabilize a bit. We're in Dish. We already covered that one. I like Dish. We're in DraftKings. So right, Drew, what did I do? All right, DraftKings. So making a really nice move today. Had a nice base here. This was a good spot to get long. We sold already. We're continuing to move and trade DraftKings. It's really starting to repair itself. You got the 8 crossing back above the 21 EMA. Stock broke through both of those, hitting the 200-day today. So not everything stacked as normal, but you know I'm a DraftKings fan. And nice Bollinger Band opening up as it started to tighten in here. So I think good opportunity, but our DraftKings trade is in great shape. It's we sold for 36 cents. It's down to 6 cents today with 4 days to go. We may look to close this out because we have some time to go. 6 cents is a little bit more on 36 than I would like to give up yet, but why wait 4 more days on it? But we're up nicely today on DraftKings, so I'm really not going to do much of anything. So another winning trade on DraftKings. Take a look at IWM. So as we know, we bought the 250 put and we sold the 223 put down here as to help pay for this thing. We've been just paying this off bit by bit by bit. Overall on this trade, I need to move some things out of the way here. So overall on this trade as a hedge, we paid $29.10 for this put, and we've already written off almost $9. So it's down to $20 on this put, plus the money we just took in for selling this, which is another $113 or $1.13. So depending on how this put down here holds up for us, this is in good shape here. So we've got great long put here, giving a short delta, about 88 deltas short, including the fact that we have a short put on that. So that's in good shape, doing what it's supposed to be doing. Gives us negative delta, and we make money on it while we're doing it. So it's basically so far free short delta. All right, Love here. Really disappointing in Love. It really failed at this downtrend line. Made this big breakdown the other day and continues to weaken. I don't know why Love is so weak compared to most of the rest of this sector, which is doing really, really good overall. So Love down today. American is doing really well. Even though a couple of them, they've had a little bit of a sell-off. American, Delta, United, all look similar, but Love was a lot flatter in here. Still a really good support here. I don't like the fact that we've had such a strong sell piece here, but we'll continue to deal with it. It's only a point below our we're sitting here at 58 and change, and 60 is our put. So not a big deal. I just would prefer to see something better on that. Nvidia is just continuing to soar to new highs. So I know there's a butterfly on this one. I think Anya or someone did the butterfly on this trade right around 700. So it's right in here. Looks decent, but it's really had a pretty strong move. We're also in QS. So QS, we did a call spread on QS. I didn't want to sell puts on it in here, but I like this move higher. So what we did was we bought the 29, sold the 34. And we're moving up. So we've put $1.60. It cost us to put this trade on, and we're in a squeeze. This thing's really tightened up in here. It's up nicely today. So I think we definitely could run up into this spot here. We've got 11 days left on that call spread on QS. So liking QS. Rocket. So Rocket has this nice I don't know if it's really a cup pattern, but it's a pretty nice rounded bottom in here, which is really nice to see. Is it a cup with a handle forming? Maybe. So I like what you see in here. On Rocket, we bought the 20 call on Rocket. I didn't want to sell on this one, so I bought the 20 call on Rocket out in July, and this thing's up decently today. But I think Rocket could definitely make a move up into these upper mid to upper 20s. And if it's already getting right close to these things, but this really cup with a little bit of a handle, if it breaks above this level right in here, I think we got something going. So I really like Rocket in here. Who put something in Jets? Okay. JETS, Jets. So here's the ETF, Jets. Taking a look in here, it's the same pattern, that we're seeing in those airlines. It looks a little bit better than some of the other ones, than some of the individual airlines that we had. But I think this is a significant possible double to triple bottom in Jets. Moving up, rode the Bollinger Band up. It broke above. It's 8 and 21 EMAs. It's holding the 50 in here. Even though things are weak, I think you still get some opportunity to move up. So I do look at that. I do like the looks of that overall. That's going to help our trades out, or hopefully our love trade out a bit. Okay, so our RUT, broken wing butterfly. We are at 2250 center and a 2270 center at 2310. We would have to put on a third wing on RUT. RUT looks really solid in here. This could go and give us some problems as well. We had a nice winner back in here when we traded sideways. If we can stay inside this range, I think we'll be all good on RUT. But RUT's up nicely today. It's up 0.7%, and it's the best performing index that we have. RUT sucks. Don't know why I keep trading it, but it's all good. Now, SPX, what do we got on here? We're down a bit today on SPX, and that's all good because what we have trading on SPX right now is we've got a put calendar at 4180, and that calendar is pretty close. It's not pretty close, but it's up about 10%. So I'm going to let that thing ride a bit in here, but I'm looking to potentially take that one off. So we put it on for $16.20, and it's at $18 right now. So it's 18 minus 16.20. It's $1.80. It's up 11%. So might be taking this thing off today. So we've got a nice calendar in there. That's a nice winner. We've got an iron condor in there that's profitable. Actually, we have two iron condors that are profitable. One is $1.25 already below its $6 value. So I'm looking to close at $4.25 on that one. So that's a nice winner. I've also got a calendar at 4170. That one's slightly in the red. Might just leave that alone for a little bit, but it's doing okay. It's pretty flat, down 30 cents. And then we have another calendar that we put on at 4140. That one's a little bit more stressed out. It's off about 80 and about 8%. So let's see, 32.25. It's sitting at 30.85 right now, which is $1.40 divided by 32.25. It's off 4%. So nothing I'm going to do about that. But I do want to look to put on a new calendar trade today with a long, probably around 60 days. I'm also going to look to put on a short-term wide ass butterfly, excuse the language if that matters. to you, something that we've been playing around with. We also have SPY. So with SPY, I have sold up here. Gotta get up a little bit. Actually, I bought the 455 leaps, and I've been selling against it on these puts. So I own the put leap up here at 455. I've sold. We're just continuing to pay that one down. That's paying off today on this move lower. We've also got TJX. So TJX, what did we do here? TJX, we sold the 65 put on TJX. All right, and here, it's a put we sold. All right, on this drop down, I like the support level that we have in here that we've bounced off of a couple times. This is a nice reversal candle. We did not get any follow through today, but you are getting that MACD starting to reverse here. You are getting a first yellow bar on the squeeze, which means we could be starting to reverse here. So that thing's all good. It's basically flat. And then let's take a quick look at VIX, where we own the 2025 up in here. Decent looking reversal candle on VIX, still at very low ranges. We sold this up in here. We'll see what happens, but VIX maybe wanting to get its mojo back. We'll see. And then XLY, because Amazon is down about 0.3, Tesla is down 2% today. So XLY is going to be taking a hit off of these. I think McDonald's, Home Depot's off a bit, and so is McDonald's. I don't even know where I have this on the. McDonald's is flat today, and then Home Depot's down about 0.5%. So overall, discretionary, putting some pressure on the XLY here. We sold up here. It's all good because we own way down here because this thing has moved up so nicely for us. And let's drag this uptrend line a bit more. So you've got some potential support. In this area, you get your uptrend line up in here. It did break the 8 and 21 EMAs, so it does low cause for concern overall, but we own this leap and we sold this one, so we're gonna make some money on that. So that's all good. All right, if there's any stocks you want, Igor, I know you're on, if you want to run through some things, you feel free to do that. There's where we are in all of our trades. We're up today. Market's down, we're up. However, I have too much delta again. So what we want to do to reduce that delta is I'm probably going to add a wide butterfly. I'm actually going to look to go out maybe 11 days. I'd like 15, but we'll look at 11 days. Let's take a look at SPX. Let's see what we can do here on SPX. This is all right, pretty strange. All right, I'm going to let's switch screen shares. All right, so let's get up into here on SPX. I'm probably going to go out to we can go 15. Let's go 14. Maybe let's just go to June 18th. This probably has more liquidity. We're down about 10 points today. So if we look at the 42.20 and go, let's see what's 100 points down is 41.20. 100 points up. It's 43.20. So let's go 25.15. All right, so for an iron fly here, it's going to give us some decent negative delta, and we're pretty much right at the money on this piece. I like to usually go a little bit in, so let's go 42.10, and we'll go 100 wide. Can we do that? All right, so we go 100 wide. I'd like to go a little bit more, so let's go 4,100, which would be 110, and then 43.20. So we can get about 50. We're going to pay about 50 on this one. So let's, all right, so let's put one on here on this butterfly. We're going to center it at 42.10. It's going to give us some nice negative delta in our account. And we'll go here, send the order. All right, so there's a little bit about where I'm putting that butterfly on. And then what I also want to do is I want to take a look out around 60 days and see what we have in here. Same type of a thing. I may go down to I'm going to do a calendar. So we're going to do a calendar about 20 points below where we are. We're going to buy the 4,200 and then 53 days. What's 53 days? We should put us right here. We can try the July 16th. 4,200. We'll sell this on this put calendar, about 18 bucks. So this will give us some more negative delta and give us a calendar out about 60 days as well for around 1790. Let's see, we're gonna try to get 18. This one, we got 18 bucks. So I'm gonna put on a calendar, and then I'm gonna put on that wide butterfly. We'll get those posted. Igor, I don't know if you want to jump in, share anything. I'm going to jump off of that screen. We'll leave it up on my toss for a moment. So there's a couple extra trades that we've got on. So on my individual account, take a look. We're still trying to get filled on this wide ass butterfly. Let's see, I may have to walk it up a bit. See if we can get filled. For sure, though, we did get filled on this other calendar. All right, so this calendar we put on the July 16th, July 30th. Calendar, and we did that one at 4,200, and we paid $18 for it. Oh, and there's our wide butterfly too, which took our deltas negative. Perfect. It's exactly what we needed. All right, and so we bought a calendar for 18 bucks. And we're going to look to make 15%. So I'm going to put an order in to close that at 20.7. All right, and then we got filled on our wide ass butterfly in here. So we'll add this trade and then we'll be done for the day. All right, so the SPX was a June 18th. The AMs, by the way. Not that we're going to hold it that long anyway, so it doesn't really matter. Butterfly, and we did the 4100, 4210, 4320, and we did that for a 5110 debit. Which added nice negative to us. And 5110. Margin on that one is going to be, again, 5100. All right, we'll get that posted as well. Any questions on anything? If not, Igor, it's all yours. I'm going to jump off in a minute or so.
No worries. Sound check real quick, guys. Can you hear me?
Yep.
Awesome. I'm going to share my screen and just kind of walk through positions that I have on. I know we just did that on Friday, so not much has changed, but if anyone that's on the call has any questions about positions that I'm going to go through, feel free to ask. Hopefully, I will be able to explain what I'm thinking or what I'm seeing or what I'm doing when I'm doing it. And notice I'm going to share my screen if you're all set, Tom.
Yeah, yep. Feel free. Take care. Take it easy.
All right. We'll see you later.
I'll stay on. I'm just,
yeah, of course. Screen. So I am sharing my Option at Explorer screen, and I'm going to start off with a couple of positions in the Russell. I have, so this is one of the positions that I have on. This is the closest to expiration. This one has 25 days left. We've been in this trade for 20 days. And as you can see, it's a very simple put credit spread. We are short at 2000 put. We're long 1950. So this is a 50-point wide put credit spread that we sold for $5.30, and it is currently trading for $1. So, and I mentioned this on Friday, I'm going to repeat again that, you know, the reason why I would lean towards taking this trade off is because in the first 20 days, we were able to sort of collect $4.30 out of max potential of $5.30. And now we have 25 days left. So we're about halfway into this trade, meaning that when we opened this trade, we had 45 days until expiration. We're 20 days in, we have 25 days left. So in the first 20 days, we have an unrealized gain of about $4,300. And to get the remaining $1,000 or $1,100, we would have to wait another 25 days. If there is an opportunity to find another trade where we can potentially make more than $1,100 over 25 days, it definitely makes sense to reallocate capital, right? Use the same buying power that is being tied up or used in this trade to put on another trade and potentially have a higher yield on capital, if you will. So this is one of the trades that I'm looking to do today, which is going to be a closing trade. I'm going to buy to close the 2019-50 put credit spread. It is currently showing a mid price of 105. I'm going to hang an order out there to close it for $1. And I think that if the Russell continues to trade where it is right now, maybe a little bit higher, we may get a fill towards the end of the day or maybe later this afternoon. Moving on, we're going to look at the following. And the reason why I started with Russell, as Tom mentioned, that you know, we say rut sucks is because when this index gets going, and you have any kind of neutral positions, it tends to run things over. I think this is what we're seeing right now. I think overall, Russell is just playing a little bit of a catch up to other indexes. But today, specifically, we have S&P is down a little bit, NASDAQ's down a little bit, and the Russell is up 0.7%. So there's definitely some rotation going on out of S&P and the Qs. And it looks like small caps are now driving this bus. Another position in the Russell, this is another put credit spread in Russell 2000. This is another 50-point wide put credit spread, where short at 2050, long at 2000, with 39 days to go. We're in this trade for 11 days. We sold this 50-point wide put credit spread. We did not collect as much as we did in the other put credit spread. We collected about $4.75. Right now, this trade is showing an unrealized profit of about $2,000. So out of 4,750, we're showing an unrealized profit of about 2,000. So we can say that out of 4,750, 2,000 is about a 42% of max potential profit. That's where we are right now. And you know, if we look at how much time we've spent in this trade, we started this trade with about 50 days to go. So 11 days out of 50. So we were able to get to about 40% of max potential profit in about 20% of the time, right? 50 days was the DTE, days to expiration. We've been in this trade for 11 days. So we've spent 20% of the time that we're needed to stay in this trade, and we have gotten to about 40% of max potential profit. I do think from a, this trade definitely benefited from the fact that the Russell has moved about a half of one standard deviation to the upside over the past 11 days. So this $2,000 unrealized gain is not due to option decay by itself. We definitely benefited from the delta as well as theta, which is rate of decay. But implied volatility has risen just a little bit over the past couple of weeks, so that kind of played against us. But all in all, I do think that we are slightly ahead in this trade. And if anyone is in this trade and wanted to take profits early, I think that this move would be justifiable or justified. So that's the second put credit spread. And I just want to go back real quick to the put credit spread that we have in the July 2nd cycle. So having two put credit spreads on, we obviously have a lot of, or we should say, we only have positive delta. So this is what combined both trades would look like. We have about plus 40 Russell 2000 delta, which means that for every point Russell goes up, we'll make about $40. For every 1 point that Russell 2000 index goes down, we're going to lose $40. So one thing I would maybe consider doing, right? Instead of exiting out of this position, I could turn this position into a bear trap, one of the trades that we use in Income Navigator service. And what I would do, I would just look to add about one expected move away from where we are today. I would look to add a 25-point wide put debit spread. We can look at what is currently being priced in by just looking at the price of an at-the-money straddle. Or what we can do is we can say, all right, I'm going to hold this for maybe until, so hold it for another 22 days. So this is what T plus 22 looks like. So this darker gray area is what is currently being priced in based on current implied volatility. So this is a one standard deviation move, right? So right now options are pricing in a move to about 24.10 to the upside. and or about 21.95 to the downside. So let's call it 2200. What I can do is I can see what a buying a 25-point wide put debit spread around 2200 would look like. So if I buy the 2200, and I could probably do, let's see what a 10 lot will look like. So 2200, 2175. Right. So this put debit spread will cost me $3.85. Right. So I'm going to not just give up the $1,000 of unrealized profit that's left in the put credit spread. I'm also going to pay some money, right, for this put debit spread. But in exchange for that, what I will end up with, right, I still have no risk of the upside. So if Russell goes to 2,400 as options are currently pricing in, no worries. There are no risks to the upside. So instead of making, about $5,300, this trade is only going to make about $1,400. But if over the next 22 days, right, we get a move just slightly outside of one standard deviation or what options are currently pricing in, right? Say we move to 2150, which is about a 6% move from current prices. This trade will really come alive, and we have a potential to make, upwards of 20,000. In real life, I don't think this is going to happen that way, because if we do see a move over the next 20 days or so to the tune of about 5 or 6%, we're probably going to see that with higher implied volatility. So let's say, vol goes up 15 points and we get a one standard deviation move to the downside. We could still make between 15. This trade will likely show about a $15,000 profit, and that profit will come from decay of the remaining premium in the put credit spread. But now we also will have a 25-point wide put debit spread that's going to be in the money. Right. So if you wanted to convert this and play to the downside over the next 3 or 4 weeks, one way to do it is to, instead of closing out a put credit spread, you can add an out of the money put debit spread. You will spend some of that unrealized profit that you currently have. But if we do see a move to the downside, obviously this trade is going to make money. But also what it will do, it's going to protect the other put credit spread that we have on with more time until expiration. And this is what both positions would look like. Right. So we go from being plus 40 delta combined to minus, 2.5. So we're really hedging ourselves to the downside by adding an out of the money put debit spread. I hope this isn't too confusing, and do let me know if you have any questions. I'll just hang on for a minute or so to see if we have any questions, and then I'll move on and talk about other positions. All right, so no questions. Let me just go back. All right, so this is just one idea to turn a winning trade into a very cheap downside hedge with no upside risk. Obviously, the risk is still in existence here if Russell moves down to, 12, 13% or so. If we see a move down from 2,300 where we are right now down to below 2000, even the hedge is going to start to accumulate positive delta, and then we still have downside risk underneath about 1975. So that's one thing to consider. Now, the third position in Russell is the scaling income butterfly. We just put this trade on 5 days ago, and this is the first 1/3 of the position. We are looking to add 2 more layers, or 2 more tiers, if you will. We're looking to scale into this position as the price of Russell continues to move higher. Our next trigger point, or level where we need to consider adding the second third, is at 2320. Sorry, at 2330. So my trigger point, or level where I am going to, activate, so to speak, the following adjustment is about 50 points away from the center, or from the short strike of tier 1. So the first layer is centered at 2280. So 2280 plus 50 is 2330. So at 2330, I need to add my second 1/3. So let's assume we get to 2330, which could happen today if things continue the way they are in the Russell. My next adjustment is going to look something like this. I will go 40 points above tier 1. So first tier is centered at 2280. My second tier is going to be at 2320. My downside wing is going to be at 70 points below the short strike. So from 2320, we go down 70 points. And then to the upside, I will go 60 points above the short strike. From 2320, we go to 2380. Right, and this is what my position is going to look like while I'm scaled in 2/3. Right, so as the price continues to move towards the edge, or towards the upside break even, I'm going to continue to add my broken wing put butterflies, and fully scaled position is going to look similar with one more butterfly, and it's going to be centered 40 points above tier 2. And the level where I'm going to add the third part of this trade is going to be about 50 points above my second butterfly. My second butterfly centered at 2320. So the adjustment trigger point is going to be 2320 plus 50. So 2370 is going to trigger the following adjustment, which is going to be another put butterfly centered 40 points above tier 2. And then if the price continues to move to the upside, I'm going to start a rolling sequence by closing out the original, or tier 1, and rolling that up 40 points above tier 3. So tier 2 will become tier 1. Tier 3 will become tier 2. There's going to be no more original tier 1. The original tier 1 is going to become the new tier 3. Right? And then eventually, when the price comes back into the profit tent, that's where this trade is going to realize a profit. And I'm going to post every single step of this trade. I'm going to post on the trade forum. You can go to, if you're a member of Income Navigator, you can go to dashboard Income Navigator, and there you will see a list of different trade posts. And I'm going to update this trade's thread with any new adjustments. And I will leave comments and thoughts as we continue to adjust this trade. So for right now, right, a lot of times we kind of sit there and like, now what? What do we do today? Okay, market is up. This is going higher. That is going lower. What am I doing? We're doing nothing. Not in this trade, at least, right? We have nothing to do here until we hit 23.30. If we don't hit 23.30, we do nothing to this trade. This is a whole lot of waiting for things to happen in order to make adjustments. Or if we spend the next month somewhere around 22.80 and 23.20, right? We can see that T+0 line is going to kind of drift higher. And, if we start to kind of run short on time, or if we're about halfway into expiration, right? We initiated this trade with about 58 days. So if we spend a month just chopping sideways somewhere inside of this tent, and now we're kind of, at a 30-day to expiration mark, we could still scale in, right? It's not too late, but the later we go in the trade, the more sensitive the trade will become to price changes. And if, Russell spends a month or so, or 5 weeks, just trading sideways, consolidating, and only then takes off, right? We have a much higher risk of getting into trouble. I would rather take this trade off and initiate a new trade, right? It's going to be higher, or it's going to be closer to where Russell is trading. And with more time until expiration, this trade is a lot more forgiving, right? T+0 line is going to be a lot flat, right? Today it's really flat, but if we look at what this T+0 line looks like at T+36 with 17 days to go, you can see how it's sort of flat inside the tent, but then once we go outside of the tent, it really starts to pick up to the downside if Russell is going higher, and the same thing on the downside, right? So I want to keep my T+0 line as flat as possible in this trade. So if we spend the next 30 days inside the tent and we're somewhere here, right? Maybe we're up 20%, 25% on current risk, which is about $1,500 per one butterfly. I would rather take this trade off and set up a new trade following the same exact protocol. So that's my plan for this trade. Do nothing until we either hit the adjustment point, or we can take a 15, maybe 20, 25% winner if Russell doesn't really go anywhere and just sits inside of the profit tent. So that's what we got with as far as Russell. So we have 2 put credit spreads and a scaling income butterfly in Russell. And then I have a couple of positions in SPX. This trade here is going to expire this week, right? We have 4 days to go. We started this trade 52 days ago. We collected about $1,100 up front, and that's where this trade is right now. There's really nothing else to do. It's very unlikely that we see a move down to 3,900 on the S&P by the end of this week. But if it does, we really get the nice bonus here. And maybe if S&P is going to settle somewhere under 39.25, but above 38.25. So there's about a 100-point range where this trade could really, really kick in the profits. But if nothing else, all options are going to expire worthless, and we get to keep the $1,100 that we collected up front. Really nothing to do here. Next trade we're in, this is a butterfly. I posted about this trade on Facebook. And again, this is very similar structure, not much to do as long as S&P hangs out somewhere above 39.25. Options that were long and short here are going to decay and potentially expire worthless. We still have 32 days to go. So another trade that requires a whole lot of nothing, very boring, very, you could look at this trade maybe once a day. You can check in once every couple of days. However, if the S&P is, if you're seeing market in turmoil on CNBC, odds are you need to look at this trade. But for the most part, if you're just looking at where the markets are, and if we are, within, 1% up or down, in this case, or in this trade, it's down. If we're not down 1% or more, there's nothing to do here. All right, just very easy, very slow, and very steady here. And we have a position in S&P with 39 days to go. And this is a broken wing put condor, where we're currently sitting at a max potential profit to the upside, or so, very close to it, right? There's about $40 to be made if S&P stays here. I still plan on potentially rolling the 40-80 down, maybe 10, 20 points, and continue to hold. And if we start to kind of run into some sort of resistance and it looks like S&P is going to roll over, I may start to look to roll my long puts on the downside from 3,800, maybe roll it up 25 points just to see where we are. And I'm going to potentially start to remove risk on the downside. And that's going to come with the cost of that is going to be, I'm going to lower my upside potential here, but I'm really playing for the price ending somewhere very close to or inside of the body of this condor, which is where we get the most benefit. And we can see, what is currently being priced in over the next 30 days, right? So one standard deviation move to the downside will put us somewhere around 40.75, and this trade could really show a nice, 17%, maybe 15% return on risk. But if we move slightly outside of that range and we start to kind of dip below 40.50 on the S&P, this is where price is going to enter the body, right, or the profit area of this trade. And that's where, with 9 days to go, this trade could really kick in, as our long debit spread here is going to be in the money, and it's going to increase in value with every passing day, while our short out of the money put spread is going to lose value every passing day, because it is going to be out of the money with price somewhere around 40.50 or so. So there's probably a few more adjustments left here. Today, I'm not looking to do anything. If we start to move lower, I may start to make incremental adjustments. But for right now, I'm just going to let it hang out. And, I can hold it for, we've been in this trade for 20 days. I can hold it for another, 15, 16 days, and to see if my T+0 line is going to actually pick up a little bit. And as we're moving towards the profit area or the profit zone of this trade, I may start to make incremental adjustments to reduce or remove as much risk on the downside as possible, and potentially benefit from price entering the profit area here with about 2 weeks until expiration. I hope this makes sense. I know it may sound like a lot. More importantly, guys, those that are on the Zoom call, you have the chat, you have direct access, you can ask questions. And again, I keep repeating myself, but one of the best ways to learn what we do is by asking questions. If you aren't clear, if you're not sure, and you're not asking questions for whatever reason, then you're really not getting the full benefit of being a member of Income Navigator and being able to analyze and look at trades the same way myself, Tom, Gabe, and anybody else that's part of this group that's been trading for a while. And you want to be on that level where you can look at a trade and understand, where things are moving and how to make adjustments when you need to make adjustments, and more importantly, the purpose of what you're trying to accomplish with those adjustments. If anyone else has anything to add, Gabe, if you have anything, feel free to jump in. If not, we're going to wrap up here. And thanks for everybody for joining us. Thanks for taking the time. If you have any questions, you can post on Slack in the chat room. But I will post any trade adjustments or any exits for the trades that I just went over today. And as I take trades off, I will look for other trade setups. So we're definitely going to initiate new trades, but I don't want to have, 40 different trades hanging out there. It's not only confusing to you, it kind of doesn't do me any justice either. I don't want to manage a bunch of trades. I would rather increase size a little bit, but manage just a handful of positions and spread them out across multiple expiration cycles. So as I start to take trades down, I will also look to reallocate and initiate new trades.